will allow for first home buyers to access up to $50,000 of their super for a home deposit because it's better to get into a home sooner.
You haven't been able to buy a house, is that right?
No, but I'm sure that some people didn't have to use their super to buy their 27th or 26th home either. I don't know why we should have to do that. What are we going to do later?
The current pension pool far exceeds Australia's annual GDP. It is bigger than the total market cap of the Australian Stock Exchange. So to a large degree, we've completely outgrown Australia.
It's championed around the world and is one of the most important assets that we own. So who can Australians trust to look out for their superannuation in this year's election, especially when financial markets are this messy? Hello, I'm Chris Bourke and welcome to the first of our special Bloomberg Australia podcast election episodes, where we dive into the issues that matter most to the economy, business and you ahead of the May 3 vote. We'll be speaking to some special guests for their expert insight into issues that are shaping the future of Australia. First up, superannuation, something that's been on the minds of many of us this month as we've dared to look at our balances and seen the impact of some pretty ferocious market moves. To discuss the outlook for super as we head toward the election, I am delighted to be joined by Mary Delahunty, who heads the Association of Superannuation Funds of Australia, which is often referred to as the voice of the super industry. Mary, welcome to the podcast.
Thank you for having me. I'm so thrilled to be your first official external guest.
You absolutely are our first official external guest. And we are honoured to have you. Before we get on to the election, though, let's touch on the past couple of weeks, shall we? It's been a bit of a precarious time for millions of Australians with their super accounts hit by a global market meltdown. If that wasn't enough, a coordinated cyber attack. I imagine there's a lot of people worried about these goings on. Do you see this volatility ending, or have we entered a new era thanks to Trump and the unpredictability we're seeing in markets?
Yeah, I think if I could answer that, do I see the volatility ending? I might have been out of here and on an island already, Chris. Is it a $1 trillion question? It's certainly a difficult one, and it's quite understandable that Australians are sort of feeling the bumps of the volatility. Yeah. It's prolific, isn't it? The market moves are prolific. You see in any one day, especially in the US, the markets can open with this flurry of hope, but by midday that's turned to despair again. And so even within days, the volatility is quite rapid. So I guess what do we do, superannuation investors do about that? And really we've got to see it in the long-term sense. So we've seen volatility before. It often hasn't been driven by a trade war and sharp policy sort of responses and retaliatory actions. But we have seen volatility through the GFC. We've seen it in a number of other occasions. And so if you zoom out a bit, take the noise down, what we can still see is that superannuation over 25 years, as ASFA's research will show, delivers on average 7.5% return. So it outpaces inflation and it puts money in people's pockets over the long term. That's the challenge. Can we zoom out and see it in that context?
Yeah, I guess it largely depends on your risk profile as well, and just how much of this one can stomach. Speaking of which, at times like this, give us an idea. What does your job look like? I mean, are you kind of fielding calls all day? Does it? Tell us about. Give us an idea of that.
Yeah, it's how would we put this? Madness. And I've got to say this is just the best job in the world because I adore this sector. And so to be their advocate and to be the one that brings people together is such an honour. At times like this where we're coming together over a number of different areas of life, it's certainly a busy challenge. But I guess it's like stepping back from the markets too. When you look back over the course of your day or your week, you realise the role of the association, like you realise the good work that can be done, because you're not only helping to coordinate public messages of calm in periods of volatility, but you're also helping to actually do deep technical work on areas, for example, of service uplift, on areas that matter to members. So it's quite a thrill, but it's pretty it's as volatile as the markets during the day. Yeah, the phone goes nuts. The emails go nuts. The team chats are always nuts, aren't they? Anyway, and I've got a lot of children. So do you think that they always manage to insert themselves into the day sometime as well? So that's what the day looks like. Sort of a lot of spot fights.
You've got a lot on your plate at the moment, by the sounds of it. Look, Trump's tariffs have pretty much overtaken the news cycle in the first couple of weeks of this election campaign. But, at the same time, these crises really do remind us just how vulnerable our retirement savings can be to global influences, how important it is to keep those accounts growing where possible while minimising risk to Australian workers. So what are we hearing in this campaign? Because I don't seem to have heard a huge amount so far, but what are we hearing from the main parties on super policy?
I guess we look at election campaigns, you look at super in kind of that two buckets of work, don't you? There's the operations of the super fund itself, and we haven't heard from either party that there's going to be many changes to the way in which super operates, and that's something that ASFA has campaigned for. Policy stability in the way in which super operates is really important. But then the second area of work is in the portfolio, and I think we are hearing from our leaders or prospective leaders about what they consider good settings to be, good investment settings to be, good relationships to be from a diplomatic sense, how they would manage that going forward, which actually does have enormous impacts on the successful, on how successful investments can be and how successful sort of prosperity broadly can be in Australia, because our retirement savings are exposed to that sort of international feeling. Not just in the US, not just the equity markets, but broadly. So relationships with Europe, how would they manage that? And where can we find new markets for products, etc.? How will they manage the fact that our near neighbours within the Southeast Asian region are really trade exposed and heavily trade dependent? And so what's the knock-on effect of tariffs there? So you do hear from leaders about those kind of areas which actually have an effect on super as an investor.
What are you hearing specifically? Have you been for example, have you been speaking to anyone in the government recently about the market mayhem that we're seeing?
We keep a pretty close line of communication open with both the government and where it's appropriate with the opposition as well. We had a call with the Treasurer. He is obviously in his office quite... They need to be able to understand how superannuation funds are seeing the challenges at the moment, seeing particularly their liquidity challenges and opportunities and what they're sensing in the markets. And so he does test that regularly.
How was he feeling?
How was he feeling? Yeah, that's a good question. Do you know, did I stop and ask him how he was feeling? Oh, that's rude. I definitely told him how I was feeling. So that
I bet you did.
I better go back and make sure he's okay. But look, I think he was. He's obviously still convening in his ministerial role, meetings with the Council of Financial Regulators. He'll be keeping across the Reserve Bank. He's obviously keeping across the superannuation funds and just being able to develop a good understanding of how we're seeing the markets.
As far as our actual kind of policies go on the road, on the campaign trail, the only one, the main one we've heard so far is Peter Dutton reiterating his policy for early access to housing. We know that ASFA isn't a big fan of this policy. Housing is one of Australia's biggest problems. Why shouldn't young Aussies be able to access the superannuation early to buy a house?
Tell you what, I am a big fan of this election really considering housing deeply, because it's such an economic handbrake on this country, isn't it? It is deeply unfair, but it will erode the prosperity of all of us over time. And so it is good to see politicians, especially in an election campaign, focused on that issue. My concern is that we need a lot of focus on the supply side. This is a supply side problem. We do not have enough houses in enough of the right places for Australians to buy into.
Sure.
And so I guess our hesitation with efforts that are just demand side levers is that they won't work. I mean, let's set aside the unfairness for a second, and we might just circle back to that. But just to look at it from an economy level, if you've got it's fairly well accepted supply side problem, and your main policy is a demand side lever, that's going to leave it wanting, full stop. And I don't think, I think Australians are smart enough to see that, and they want and demand and quite frankly deserve from politicians of all stripes and colours really good housing policy and deep reform. And this is not that. So to sort of circle back on why then, well, why wouldn't it work? It's completely understandable that it might be popular because it's sort of in a void of actual solutions. So that's, I get it. But we've done enormous research to show that actually of the 5.3 million eligible first home buyers in the system, over 5 million of those would not be able to make full use of the policy. Not to mention that actually if you're going to buy into the markets that people are locked out of at the moment in Melbourne and Sydney, even as a couple, draining your entire superannuation balance, the first home buyer doesn't get you the deposit. So there's just so many elements to this. But let's not beat around the bush. Australians need housing policy. They need a supply side policy.
And as you say, at least there is some talk about it in the campaign. I mean, as you say, it is a massive crisis. The flow-on effects from not owning your own home, that's potentially setting up a whole lot of other problems for our future generations.
It is, and we've got so many policies that are sort of they imagine that you've got your own home already. So you're almost you're doubly hit if you don't.
Yep.
And so we can see that this needs disruption.
What would you like to see? What would you like to see these our leaders talking about? When it comes to super policy, what kind of reforms do you think are most needed to help Australians retire more comfortably?
Mostly we like to see good sort of policy stability. And so we like to see policy that is well thought out, well consulted, and wouldn't be Robinson Crusoe in that because every sector in Australia would be asking for that as well. For super, though, we are long-term investors, and so we also take operational decisions over the long term that matches that investment horizon. So we want to see that. But there's a couple of things in super. It's an incredibly well-functioning and world-renowned system, but it does have some equity and fairness sort of elements to it that really do need to be considered. We want to see an expansion of the low-income superannuation tax offset, the LISTO. We're really good at acronyms. That one's a really good one, I think, because it's nice to say. It rolls off the tongue. But
sounds
LISTO,
very Aussie.
yeah, it does, doesn't it? LISTO. I can do that because I came from Colac and I've got a really good country accent that I try and eke out of my voice. It doesn't work. So low-income earners actually can often face a tax disincentive to set their money aside for superannuation contributions. Now, obviously, that shouldn't happen. So we want to see some focus on that. And we'd like to see payday super, the legislation for payday super, be given fair passage through the Parliament and a quick implementation schedule. That means that your super is paid at the same time as your wages, which our research shows Australians love. And like if I ask someone out on the street now, do you think they'd think it already was because it's your wages. It's just part of it's deferred. So that's got to be done.
Yeah, and that has been talked about for a long time.
Yeah, we've seen legislation now, so let's get on with it. Yeah.
Okay, when we come back, should our government have more of a say in what our super funds are investing in? Welcome back to a special pre-election edition of the Bloomberg Australia podcast. I'm Chris Bourke, and today I'm talking to Mary Delahunty, head of the Association of Superannuation Funds of Australia. It's a bit of a mouthful, that is.
Yeah.
About the big issues facing one of our biggest assets. So, look, I heard on the grapevine that you went to the States recently. Yes, I was at the Super Summit with many of our members, which was really a terrific opportunity to sort of build those relationships with the new administration. Just for the uninitiated who might not know what a super summit is, that was as I understand it, that was a very high-profile summit in both Washington and New York, where the top super funds promoted their investment power to the likes of the Trump administration and A-listers from Wall Street. Who did you get to talk to?
Well, not only just our members, obviously, at ASFA, because but I just have to put the members first. So we obviously have had a number of superannuation funds, and Macquarie Bank sponsored an IFM as well, put a lot of work into getting this summit together. I met with not by myself, should say, but we met with Scott Besant, which was a fascinating exchange. We also met with many
Why was it fascinating?
It was a fascinating exchange to hear his take on this is pre-tariffs, but we sort of knew how the administration felt about trade and the way in which US has trade relations, and that was fascinating to hear him sort of put that to words. This Scott Besant is obviously a man who knows Wall Street very well. He was a hedge fund manager for many years, and so to hear him actually voice the administration's approach to trade was genuinely interesting. His speech, if anyone wants to have a look, is on record. And then he met separately with the ambassador and with the treasurer. And I understand that was pretty fruitful. These relationships, they do need to be built over the long term. It was really crucial for Australians to show up, to put faces to names and to build those relationships. I think it will hold our country in good stead in the long term once the volatility settles and once we understand the administration's approach to trade. But I also met with and had the chance to, it sounds like I'm way more important than I am, but I had the chance to speak to Jamie Dimon, to Larry Fink, to Steve Schwartzman. So these are these sort of contributions to hear how investors of such calibre were facing into what they knew to be periods of volatility was very shaping for my understanding of what long-term investors need to do. So that was quite crucial. But it was an incredible 4 days, and I think that the relationships built there will be enduring.
Those are some big names. I'm impressed.
I was I was trying to hold it together. I won't lie.
Look, why do our super funds need to woo these big overseas investors, and how is that in the interest of members?
Yeah, it's an interesting turn of phrase, to woo. I think it is important to show up and to build those relationships, as I was saying, because we learn, obviously. But the couple of the meetings that I didn't just name drop then, actually 4 of them, which I thought were probably, for me, I found them to be really crucial, were with the governors, with municipal governors of some of the states, so Tennessee, Illinois, New Jersey. And I think that that's really important. As your listeners will know, we pick up municipal bonds either directly or through index investing, and it is great to understand from that governor's point of view what the philosophy is towards either the raising of debt or how they feel about the real assets that they hold in their municipalities. And they have quite, regardless of what's going on at a federal level, they have quite a lot of autonomy over those assets and quite a lot of autonomy over their ability to raise debt through bonds. So they were crucial meetings. So it's that sort of thing, I think, Chris, where you're really building not only a relationship but a deep understanding of the underlying assets. That is really going to be quite a successful part of this trip as we move forward.
I mean, as you know, a big chunk of, almost half of industry funds' assets are now offshore. Big chunk of those are in the US. Have recent events changed your mind at all about Australian workers' exposure to the US? Should we feel safe that so much of our retirement savings are invested over there?
Well, I think it's probably of note to say that the noise of volatility at the moment and the really sort of the heart-stopping moments are largely confined to the equities asset class. Yeah. So that's not to take away that there is a large exposure to US equities at the moment. People who have a default sort of superannuation fund will find that they're kind of in a growth sort of mix, and which will be around about a 70% allocation to growth assets. That 70% allocation, a lot of it will be Australian equities, a lot of it will be international equities. Of the international equities exposure, a lot of it will be the US. the recent volatility and noise does not diminish the fact that that is the world's largest capital market and that it is important for Australians' savings to be exposed to that. So again, it's about being long-term thinkers in that capital market. And I know that a lot of superannuation funds are, they've not only scenario planned for what's going on at the moment, but they've been through it, a lot of volatility before. They understand that opportunities come of this volatility as well, and many of them are still in a buying phase right now through this. So whilst it might be heart-stopping to see that exposure, it is really important to step back from it.
Yeah, and it's important to know also that a big chunk of those assets are in private, unlisted assets, which I recently heard you describe on a podcast as some of the dullest, greatest assets that we own.
Everyone loves poles and wires, right?
Look
at that. We drive past them in the car and look at that, kids. You own those poles and wires.
Well, what a great way of looking at super funds assets. The Australian, back to your friends at the Treasury, actually, they recently directed the Future Fund, our sovereign wealth fund, or I should say, I think they asked quite politely to invest more in local assets. Do you think our government should be doing that with super funds, as in telling them to invest more locally?
I've got to say, I'm glad we've gone back to this because I felt that whole the sort of exchange that happened over the change to the Future Fund mandate to be quite bizarre. The mandate itself, the change to it, just brought the Future Fund in line with other sovereign wealth funds internationally.
Right.
And what it does operationally, in my understanding of it, is that so investors of all colours and stripes will look for that balance between risk and return, right? So what the Future Fund have been asked to do is, let's say you've got two equal assets. This will never happen, but like you've got two Apple and you've got another Apple over here, and you're looking at the risk return profile for both of those apples. But one of those apples might be grown from a sustainable farm. So it's not like you're being asked to do something all that different. You're being asked to consider the impact once you've also considered the risk return profile. It's really, I was so surprised at the kind of that happened after that mandate change. It's internationally comparative, so to other sovereign funds. But yeah, being said, back to your question, which hopefully everyone's forgotten because I just can't remember it. But yes, should government be doing that? Now, I think all superannuation funds should maintain their individual autonomy over being able to assess appropriate risk-adjusted returns. That what they can do, though, and do now, it doesn't really need government to tell them to, is that we understand that, broad prosperity is also a return element. So, for example, nation-building projects that are, like the dull ones, like poles and wires, but they can be wind farms, they can be, solar farms,
sure.
Could be energy transition assets. They don't just deliver an appropriate risk-adjusted return. They can also deliver for society. In that way, it's a double dividend. It's not a haircut. And so getting the government's role in this right is really quite important. It's not about them directing super funds. It's about getting them getting the settings right for private capital to play.
Okay, so the big question. Super funds made double-digit returns last year. They were pretty impressive. What do you think we're looking at for the first half?
I think those returns will be hard to find. They'll be harder to find this time because of the volatility in the market. But over the long term, and I know I keep saying this, but it is true, superannuation investors and the members within their funds are long-term investors. So we saw some incredible highs, and we've seen the equities markets come off some incredible highs, record highs over the last little while. Those returns that were booked really reflected the highs in the equities market, and it is the equities market, particularly the international equities, that are feeling the volatility at the moment. So it's probably not great, I'm not some sort of crystal ball gazer to say I think that's going to be harder to find, but I think over the long term, we've come out of the GFC volatility with outpacing inflation. We super funds will be putting their shoulder to the wheel to come out of this outpacing inflation as well.
Okay. And Australia did get off relatively lightly with a 10% tariff. I'm wondering if that was largely or partly down to you.
Oh.
And all those
no doubt.
fantastic conversations you had.
Yeah, no doubt. I'm sure. I've got to say the ambassador works very, very hard over there, and I'm sure that this has been, it's something that people have put a lot of effort into over a long time. I still think, obviously, that effect on Australia is the knock-on effect from other countries. No one wins from a trade war, and I feel for our near neighbours in particular in this region at this particular time. But hopefully we can continue to build those relationships, and the Australian sectors can be somewhat protected by those relationships deepening.
Okay, let's see what the next few weeks of the campaign brings. Mary Delahunty, it's been an absolute pleasure. Thank you for joining us on the podcast.
Oh, it's been a pleasure. Thanks for having me.
Thank you for listening to the Bloomberg Australia podcast. I'm Chris Bourke. This episode was recorded on the traditional lands of the Wurundjeri people. It was produced by Paul Allen and edited by Ainsley Chandler and Rebecca Jones. Don't forget to follow and review the show wherever you get your podcasts, and sign up to Bloomberg's free daily newsletter, Australia Briefing. Go to bloomberg.com to subscribe.